Ladies and gentlemen, welcome to the Beacon Roundtable. We are live on the interwebs on what could be a very monumental day in crypto. The reason for that is we are expecting an official, hopefully a real official word about the SEC approving these spot Bitcoin ETFs today. Got myself and Jangle on the line. Not a whole lot on the timeline today, Jangle, outside the BTC ETF thing. How are you? How are you
Yeah,
feeling about today?
feels like everybody's holding their breath. I remember in the middle of the day yesterday or towards the afternoon, there was the official SEC tweet from the official SEC Twitter, and markets reacted. They kind of showed their hand, right? So that apparently was a compromise. Upon Twitter or X investigation, it looked like the SEC official Twitter account was not using two-factor authentication at the time. I don't know if it was some sort of inside job, some sort of intended market manipulation, a troll trying to make the SEC look uncredible. But regardless of how it happened, there was a false announcement. And the markets reacted and showed their hands as to what the price action was going to be for the announcement. And then somewhere around 15 minutes later, it was sort of announced on Gary's Twitter that was fake news. So how did the market immediately react? Um, it was a whipsaw on the price of Bitcoin that I think saw a low. Like look at the chart here. Um, a low as like 44.5K and as high as just shy of 48K. So a lot of volume and a lot of volatility. But I think that the real market dynamic that showed itself was not necessarily in the price of Bitcoin against the dollar, but was relative performance of ETH immediately upon the announcement, and the rebound on the ETH BTC ratio. So I've kind of been saying for a while that going into the Bitcoin ETF announcement, I don't know if it'll be a sell the news, but what I do think is that most market participants have been positioning themselves for that over the last 6 months, which has led to the massive rally in Bitcoin, and that the narrative will kind of shift to ETH ETF approvals after, and we'll see ETH bounce off the lows of the ETH Bitcoin ratio. So the ETH BTC bounced today and yesterday. A lot of ETH beta has been ripping and performing relatively well. Things like ARB and OP and Lido and Maker and Synthetics and Rocket Pool, the ETH beta plays have been really the dominant performers over the last 24 hours, going into what is now the eve of likely the actual ETF approval. So most of the Bloomberg analysts, the Eric Balkunis types that everybody follows, that seem to be the authorities on ETF approvals, and ETF analysts for Bloomberg, the consensus is that they're 95% certain that sometime today the approval will go live, and sometime tomorrow trading will go live. And these people are in TradFi, so they never say anything with 100% confidence. So it looks like the market's already showed his hand. I think that we did see a bottom on the ETH BTC ratio. I've been calling that the 0.05 is the near cycle bottom, and an entry anywhere around there is likely good. But as far as what does the next few days have in store for us, couldn't tell you. Um, my base case is that we'll see a lot of these ETF issuers race to get fees as low as possible. We've been seeing that it's a race to the bottom in fees. BlackRock, Fidelity, all cutting fees for the first inflows into the ETF. So it's a really competitive space, where it's a winner take most market. So we'll see a lot of aggressive marketing, I assume, and a lot of really competitive expense ratios and fee structures for these ETFs. And really, I think the key metrics to watch are the relative amount of inflows into those ETFs, and whether or not we end the week 41K or 50K, I don't think really matters. I think really the key make or break uh, price action for the industry relies on the overall inflows over the next 3 months or 6 months, and whether or not actually see structural inflows from traditional wealth managers and TradFi into these ETFs now that they have access to Bitcoin. But crypto native capital, I think, rotates to longer tail assets. Speculative money goes to ETH and ETH beta, and yeah, we continue the 2024 bull market as scheduled. Really.
Yeah. I mean, I think you totally hit the nail on the head there. Curious to know if you're in the comments, let us know what your plans are. Are you going to be rotating? What do you think the next narrative is going to be? I know Jangle has his thoughts on that, but I want to see, in the comments, you know, let us know where you think you're going to be moving into now that, we should be having quite a bit of inflows. I think you mentioned the race to the bottom for fees. BlackRock is lowering it to, I think, 0.25%, 25 basis points for the first of 5 billion in. So that's going to be a very interesting fee war between that and probably ARK and some of the others that are out there to get those things listed.
Yeah, and I think it's important to note that, I think that Vanguard's S&P 500 ETF is like 3 bips or something. Like it's an incredibly low expense ratio. It's hard to get a product like this that low. You really can't, because for I think all of the ETFs, except for I think Fidelity's doing their own custody. I think there's one more that's doing their own custody, but the almost all of them are using Coinbase as the custodian, and Coinbase charges a custodial fee. So yeah, you really can't get the expense ratio to that like rock bottom. So I think that really these operators are willing to take a loss or not make a whole lot of money on the first few billion of inflows in order to ensure that they're the market leader, because liquidity begets more liquidity, and it is a winner take most market, right? If you look at the liquidity for like things like S&P 500 options, right? Like the SPY is the dominant liquid asset, so it just ends up being the most attractive. And so even though it's not necessarily the lowest fee way to get exposure, it is one of the most liquid, or the most liquid, because it's the one that is the most liquid. So it ends up becoming more liquid and more liquid. So that's really the key market dynamic that I think is important to keep in mind when you're these ETF issuers. As far as market participants, like retail crypto market participants, I know that there is an urge to jump from narrative to narrative, but really spend some time identifying your edge. And if don't feel pressured to overtrade. Like for me, during a lot of the um, Bitcoin dominance, my thesis has been, okay, well, after the Bitcoin ETF approval, speculation is going to move towards an ETH ETF approval. I'm going to position myself for ETH beta. I'm going to position myself for ETH itself as a large portion of my portfolio, and I'm going to wait. And that was my strategy. So if depending on what your strategy is, like I always use the surfing analogy: don't chase the wave, catch the wave. If you're shoving all into BTC, that's fine. Just make sure you have an appropriate time horizon, and you're identifying your edge very clearly, because the last thing you want to do is be hopping from hot narrative to hot narrative, missing the pumps, and being exit liquidity time after time. So figure out what you really have high conviction in, that you think will catch a narrative and will catch some structural inflows, and that ideally, if you have a long enough time horizon, has good fundamentals and adoption, depending on whether you're approaching it from an investing or a trading and speculating sort of mindset. I tend to I tend to be broken pretty 80/20, 80% or more in long term multi year holds, and 20% and more narrative plays. But yeah, it's important to keep that in mind.
Yeah, it's difficult to time the market, so obviously DCing and having a good strategy to carry you through these times is the most important. You know what's also important, Jangle?
I can take a guess.
Rob's on it.
Hitting the likes. That's right. We appreciate it.
also from Rob that on because you were mentioning a couple things when we were off camera. Like, do you have any in particular that you think are going to be some interesting beta plays off of this move?
Yeah, I mean, just looking at the price action, a lot of my original thesis that I've been sort of touting in here and elsewhere is played out. Like upon the fake news of the ETF approval, we've seen ETH beta perform incredibly well. OP up, I think around 15%, synthetics up around 14%, Lido, Rocket Pool, Arbitrum up about 18.5%. So I would say that Maker up over, let's see, over 14,
Or like,
or
yeah,
it's
or
about
14.
11.5%.
Yeah.
So I mean, I'm positioned very heavily in ETH and ETH beta and ETH infrastructure and DeFi, and that is honestly has very little to do with the it has something to do. The timing has a little bit to do with the ETF approval, and my bet that after Bitcoin ETFs are live, while it will still get structural inflows from TradFi, most of the speculative money will move towards ETH and ETH beta. Um, I I would likely hold some of these assets that I've discussed in the past anyway, uh, because I do think that they're like the infrastructure of the industry. But hey, I'm me. I'm not really a trader. I'm more of a, I'm not. I hardly ever take any positions that have less than a 3 to 5 month time horizon. So that's me. If you're a narrative trader, you might be playing it differently. But I do think a lot of the speculative money has been basically playing a game of chicken with the ETH BTC ratio going into the approval and the point where everybody turns and sort of rotates into higher risk or basically longer tail assets, especially ETH based assets. We're seeing that now. The starting gun was the ETF approval, which everybody sort of assumed was yesterday, but is likely going to be today. I do think that we have put in the cycle bottom on the ETH BTC ratio.
Yeah, to kind of back that up, so again from Eric Balkunis, who's a senior analyst for ETFs at Bloomberg, one of the major, uh, you know, key opinion leaders on this, since the beginning of starting to report on this. The SIBO has approved listing for at least 4 of the 7 on their exchange, which means I believe they're going to be ready to go as of tomorrow. They're just awaiting SEC approval. I don't think they do this without pretty much everybody on board with it happening. So now we're just waiting for that. According to Eric, looks like between 4 and 6 p.m. Eastern is going to be the official time frame after the markets have closed, most likely, which is interesting. But um, it hasn't come without some people have called for the SEC to be I guess taken to task for quote unquote manipulation. What's interesting is that yes, they probably were compromised, maybe, but the tweet that came out was probably the actual tweet that was going to happen. It
Who
just looked
knows? Who
very,
knows?
yeah.
Who
Who knows?
knows?
Like I said,
It
we're
it
not going to
did look
speculate too much.
convincing. It did look
It
convincing.
did.
I was
Um,
convinced.
I was. I mean, we were in the middle of a meeting. We're like, oh my god. So it's one of those things where, ultimately, it could have been a draft, and then just scheduling it out once it was ready to go. Just to kind of clarify, for anyone who's curious, what do you mean by an ETH beta play, sir?
By beta, I basically mean like the expected movement relative to its sort of benchmark or the market. So when I look at crypto, like in stocks, the beta is the overall market, like the S&P 500 or the total stock market. In crypto, you could say beta would be Bitcoin, where that's like the market or the benchmark. For a lot of market participants, they view ETH as the beta or the benchmark. So when I say ETH beta, I'm thinking about things that move with a higher correlation to ETH. So things that move ETH adjacent, right? And so typically, let's say Lido is the largest ETH staking protocol. So the LDO, the Lido token, typically moves if ETH is up a couple percent, Lido might be up 5%. If ETH is down 2%, Lido might be down 5%. Now that's not every single time, right? But Lido is typically a little bit more volatile than ETH, but highly correlated to ETH. So it's essentially high beta ETH, right? And there are a few other assets, so not just liquid staking, but things like layer two infrastructure tokens like ARB and OP are considered ETH beta. Maybe some like ETH DeFi things like synthetics and like Maker might be considered ETH beta. So my thought process is basically by allocating the ETH beta going into the BTC ETF approval, I will be well positioned to take advantage of the switch from a focus on a Bitcoin ETF to the focus in the run up an ETH ETF. And I'm doing that predominantly through the bulk of that would be exposure to spot ETH and liquid staked ETH. And then, 2.5 to 8% portfolio allocations to some of my high conviction ETH beta plays.
Excellent. Well, we'll move on to something, I don't know if you'll call it entertaining. I don't know if anybody here is in BitGet. I want to say some people might be in BitGet. Apparently there's some FUD going around saying that they might be in trouble. Ultimately, that the C-suite has disappeared and crazy stuff is going on. Now, ultimately, I would just kind of just laugh that kind of stuff off, but certain people have talked about it. But then, ultimately, someone from BitGet has mentioned that that is FUD. So, ultimately, PSA, don't react too quickly to stuff like this. I think they also recently posted a proof of reserve statement as well. So, ultimately, this is, CEX interesting treachery, I guess, if you want to call it that. And, something we had mentioned, off camera was the preference of trading on a CEX as opposed to something in DeFi. 18 months ago, I probably would have understood if you'd rather trade it on something like KuCoin or Binance as opposed to somewhere like GMX or PancakeSwap, or even now places like Avo, Quenta, Synthetics, Demex, some of these others that are kind of fringe cases out there where perps are starting to come alive, and options as well. So, yeah, I'm curious. And I know you and I had talked about this, Jangle, about why do people still look to CEXs to trade? Is it a high
Yeah,
frequency speed thing?
I I'm not a big trader, but
Neither
I
am I.
do I've observed the trend, right? Especially last cycle and throughout this bear market that derivative or not derivative dexes, spot crypto swap volume has been, cyclical with the market cycles. It explodes during bull markets, it recedes during bear markets, but it's generally up and to the right over time. If you were to look at the log chart of overall spot crypto volume, and another trend is that and a more consistent trend is that DEX volume is growing as a relative share of volume compared to SEX volume, centralized exchange volume. So I don't know why that wouldn't happen with derivative DEXs as well. In fact, probably more so because a lot of money is in the United States and some regions that restrict, trading in certain financial products that are available on chain. So, I can swap USD or USDC for ETH on Uniswap or on Coinbase. But honestly, like I probably do a lot more volume through Uniswap or DEX aggregators like 1inch, and I think that's becoming more common. And I made a prediction at the beginning of this year, was the tail end of last year, that through 2024 we will see at least one day where crypto spot volumes are majority on chain. And I think that might not hold for a prolonged period of time. We will see a period of time this year, in my opinion, where spot volume actually overtakes sex volume, is overtaken by DEX volume. And I don't think that's going to happen this year as in terms of derivative volume. It might not happen anytime soon in terms of derivative volume, but the crypto derivative space is so large that there is a relative to spot, that I think there's an immense opportunity, even if derivative dexes can capture a 20% of the market share. That would represent immense growth, especially if you also extrapolate that crypto uh, volumes in general go up. So I do view derivative dexes as a huge opportunity on chain. And so because that's been my thesis, I've kind of taken it upon myself that, well, I guess I better use some of these. So what I've been doing the last couple of weeks is, we've got some analysts on our team that, sometimes put tokens on our radar that maybe I don't have time to really do research in, or don't feel like making part of my core position, but I've allocated sort of like a degen trading portfolio that I've been using things like Quenta, things like Hyperliquid, and things like Avo, and these sorts of on-chain derivative dexes, and they're pretty good. And again, I'm not a seasoned trader, so I don't know if there's certain things that are just like mainstays on Bybit or Binance or other trading platforms, but like they're really great experiences, and they offer typically like Hyperliquid and Avo. They especially they offer things fairly quickly that are sort of like the narratives of the day or the narratives of the week. And Quenta has the ETH BTC ratio, so you can trade the ETH BTC ratio on Quenta. So it's super cool. I just don't see why necessarily um, in 2024 why you'd be trading on a centralized exchange generally. I mean, you got to onboard through something, but as far as dex trade or derivatives trading, leverage trading, why not do it on chain?
I agree. Probably because it's just like I said, there's probably reasons, but I do think that doing it on chain, you just have no issues with verification, and just making sure everything is valid. Uh, Speaking of that, Polygon. That's a terrible segue. My bad. Polygon's business development is on the prowl again, partnering with Fox, the big media conglomerate. They're now creating a Polygon-based blockchain database called Verify. It's a protocol, and basically they've already registered 89,000 pieces that Fox, regardless of how you feel about their media, um, is listing as stuff that they've put out there, and that I guess kind of in a way of an NFT. These things will never change. If you're following places like CoinDesk or Cointelegraph, one of the two, they already do this. Multiple Web3 based news companies have been publishing a lot of their articles as NFTs that you can get if you ever need something like that. So ultimately, with this is more of a protocol, I guess, for mainstream media. Ultimately, there are probably a lot of communication companies that are not on the blockchain. So giving them this media-led option with, Polygon pioneering this with them, probably good to get more people on chain, or at least exposed to things on chain. Any thoughts on this, Jangle?
Yeah, maybe the SEC should consider something like this with their ETF announcements.
You would think that
That'd be
they
pretty
would
cool.
consider this.
Yeah, no, I mean it makes sense, like in a world of deep fakes and fake news, to have a centralized, well, I guess centralized wouldn't be the right word, but to have a source of truth where it relies on cryptography and with private keys to verify, yeah, this media organization actually said this. Um, I have my doubts that this is going to be like too useful for at least Fox or their broader audience anytime soon, but
Yeah.
they're experimenting with it, and that's cool. And I think on a maybe not in 2024, but on probably a multi-year time horizon, I think that we might get, interfaces that interact with this where, I can go to one UI and it can plug into whatever the shared state machine is that everybody says, yeah, I actually said that. And that's not a deep fake, or that's not some fake news. This is something that I actually said, and I signed it with my private key that only I have. So yeah, it's definitely a thing, and it's probably on a positive trend. I think we're a little bit early, and in terms of like investable assets, I don't know how to get exposure to this sort of concept other than like holding ETH perhaps, or maybe coin, which I kind of view as like the bridge between the centralized world and blockchain in general. But yeah, I don't hold any it's kind of like a high fully diluted valuation compared to um, its value proposition in my eyes. But this is a cool initiative.
I mean, it gives new meaning to the term I approve this message, right? Like, and I signed this
Yeah,
message.
literally.
And they put a
Yeah,
QR code. Literally, we can go and check out the trend. That actually be kind of that's kind of dope. I like that idea. It's like you
yeah,
can
that is
literally,
interesting.
I can totally see it. I can totally see this happening because ultimately, AI video, AI audio, it's too good. It's too good. I've seen some things that scare the absolute bejesus out of me, to be quite honest. Um,
So I got a question.
yeah,
I know that Trump did his NFTs, right? And then I think
hmm
he did another collection where it was his
he did.
mugshot collection.
Yeah,
I thought that was a deep fake. I thought that was a deep fake of Trump where he was talking about his mugshot collection. And if you buy like 40 of the NFTs, you get a piece of the suit that he was wearing in the mugshot. So was that real? Was that an actual?
that I don't know, but I do know
It's
that
okay to
he.
not know because I watched
Nah,
that
I
and I
don't
was like,
know.
this is I'm looking at deep fake right now. I like did not believe it was
Yeah.
true, and I still have no clue whether or not that was actually Donald Trump saying that or a deep fake. And it's been like a
Well,
month.
apparently a wallet that's affiliated with him did move, quite a bit of ETH to Coinbase from mainnet with
Yeah,
regards
not
to
good.
sales of that NFT token. So, so just so everybody knows, Jangle is currently
Oh,
frozen.
I
Oh
lose
no,
him.
he's back. He's back because he's currently kind of in a little bit
Oh,
of a
all right.
top secret location where Jangle might be. So he may be, doing a little bit of
Yeah,
freeze
less
frame.
tropical, more Arctic.
There we go. So we're not going to quite dox where he is, but with that in mind, we'll kind of move on and get through the other pieces we want to talk about. We did talk about some exploits last week, but with Gamma and Radiant Capital. So Gamma did have a remediation plan that was approved. We talked about this with our mastermind last week, but for anybody who might be affected by this, it was a very it was a very high volume, but I think small slice of their user base that got hit by this. They're looking to do, a plan that will repay and make users whole within 8 months using staking fees. So, hopefully that works out. That's just something they came up with regards to Radiant. They actually had their DAO approve a plan that will cover their bad debt using a similar type of thing. They're going to use fees in the beginning to cover half the debt, and then within 2 months, hopefully have that paid off through OpEx from the protocol. So, really, just excellent that a lot of these Lindy protocols, if you want to call them Lindy, but more established protocols with good liquidity, are able to serve the users that have suffered a loss on their protocol. Back in our day, I know it's such a boomer thing to say. Back in my day, if it was a rug, you just dust yourself off and move on. Now you can actually be made
Yeah,
whole.
really, really, yeah. That's true. Yeah, back in my day, we got rugged and we just took it.
Yep.
Yeah, these days you are seeing generally, protocols trying to repay the debt, trying to make users whole, and I mean it makes sense. It's a hard thing to recover from a brand image perspective, and it's just tough. But it's another reason to. I think that the real massive hacks have been bridges and to just find a way to move towards a more secure interoperable future and have less reliance on contracts that are like too big to fail, right? So you can have um, you can have a little bit more resilience if you've got a protocol that has its eggs spread a little bit more. And if one pool has some sort of exploit, it's hopefully the overall protocol is solvent enough, has a big enough war chest to take that and move on. And then yeah, we'll see how recovery efforts go. Sometimes people start giving funds back when the FBI gets on them and their location and identity becomes known. So we'll see. But yeah, it's good to see that the Gamma's got a roadmap to make everybody whole.
Yeah, considering that they were willing to do this and the Harmony blockchain Did not. Someone actually asked me about the recovery one efforts for the community
Still
fund
salty about
plan.
that one, huh, Chris?
Yeah, still, yeah, no. Took that one on the chin, buddy. That's all you can do. Rip to DFK. They're still around though. Jewel got a bump blast over the holidays. So anyway, we don't really. I mean, we've talked about it. Obviously, there's a pretty hot narrative. Let's be honest for BRC20, right? For Inscriptions, Luke Dash Jr., the main developer, was looking to put the kibosh on this, specifically with an update, a PR update upstream to quote unquote fix the bug that would get rid of of at least just inscriptions on existing satoshis. They'd have to figure out a different way to do NFTs and other metadata type activities on existing Bitcoin rails. Unfortunately, he did not get, well, he had his supporters and his detractors, but the ultimately they just shut down. They just shut down the discussion altogether because they thought it was too heated and it wasn't going to specifically do anything that was going to work for them. Some people, like for example, it's here in the article, Michael Saylor actually believes that it's a good thing to have inscriptions and ordinals on the chain because it brings renewed interest to Bitcoin, which I can understand. I mean, he's so all in on BTC. He's actually looking to take more money from incoming funds to buy more Bitcoin, which is something he's always
Of
been
course
doing.
he
But
is. Of course he
of course he
is.
is.
Uh,
So of
and
course he's going to support this.
how's my stream? Am I still lagging? I know I
No,
dropped
you're
for a
good.
second.
You're good right now.
Okay. Um, I will never understand how anybody in the Bitcoin ecosystem can be upset about inscriptions. Like there is an existential threat to Bitcoin. Maybe it's not this halving. It's certainly not this halving, but you know, 2, 3, 4 halvings from now, you have this decay of the Bitcoin security budget because you're getting less and less Bitcoin created every block, which is good for the scarcity. But right now, Bitcoin block rewards are like the thing that pay miners predominantly. And when you don't have a way to pay miners, you lose miners. And when you don't have people participating in mining Bitcoin, then it gets really easy to attack and it's not a secure network. So you have to find a way to get Bitcoin a security budget, a way to pay their block producers into the future in perpetuity. And the only way to do that outside of increasing the block, limit above 21 million, as far as I know, would be to find a way to drive transaction fee revenue. And transaction fee revenue is going to go up if there's an increase in demand for Bitcoin block space and data to be stored on the Bitcoin network. And that's what Inscriptions is accomplishing. Yes, it makes Bitcoin more expensive, but it makes it secure into the future. So I've always been afraid that Bitcoin's never going to be able to figure out their perpetual security budget. It looks like Inscriptions put them on a path to be able to solve this over the coming years. And that's a really good thing for Bitcoin. And I have not heard any convincing argument to the contrary. And I'm waiting patiently. I'm really open to it, but as far as I know, like if you are a pro Bitcoin and anti inscriptions, then you've got to be like deep in this like ideological echo chamber that I just can't understand. I'm I'm dumbfounded by how one can be pro Bitcoin and anti inscriptions.
For me personally, you'd want the payment channel to be clear. And if these things are clogging that, you just have to find a better way to handle it, which I think most blockchains, including Bitcoin Lightning, have done. Um, I thought it was, again, I am on the hill that it is crazy to do inscriptions in terms of minting, NFTs and stuff, the ordinals stuff, because ultimately all it takes is the wind to change and they could shut this down. And now you are completely, I mean, you're always liquid, but still,
Who's they?
for
Who's they?
well, people who want to participate in NFTs, like buying sats on Unisat and stuff like that, or rather
Mhm.
inscriptions on Unisat and stuff like that, and speculating, finding that, and obviously it's cool that they're doing it. And I'm actually almost fairly bullish on it now, and I'll tell you why in just a second. But yeah, it's a really interesting when people can find ways to kind of hack the system and create some interesting utility on the side, obviously there will be purists, and I think that's probably the issue with a lot of this. But I do think that, if anything, it's caused more, like you mentioned, it caused more development to put them on the road to fix the security issue. Layer 2 Bitcoin chains are starting to come up, and we're going to be looking at them very closely. Besides just Stacks and some of these others that are out there, there's some pretty interesting stuff coming on the horizon. And if you're a big Bitcoin person, obviously it's not as smooth as ETH based and other alt L1s, but it could be cool. It could be interesting. I will tell you the one thing that's gotten me fairly bullish on BTC Inscription is thanks to the Ninja Alerts team. They found a way to inscribe a Super Nintendo emulator on to existing Satoshis. Apparently the addressable area of the metadata, and this is super nerdy, but it's 400K as the buffer, where you don't have to worry about paying a miner to inscribe metadata. But if you go over that, then you have to. They were able to figure out a way to streamline a specific demo to under 700K from 10 megabytes. So they were able to, and ultimately you have to actually have the ROMs. They're not hosted on the code, but by having it, and here's a demo of it. I mean, it's just crazy that, you can look at your SAT and then just literally throw up it's just nuts. And now you're playing Teenage Mutant Ninja Turtles, based off of a ROM that's hosted on the, it's crazy. It is crazy.
Well, hey,
I'm not sharing my screen. Hold on.
We know Teenage Mutant Ninja Turtles will now never die as long as the Bitcoin network can maintain its security budget, which is still in question, I suppose.
Well, it's interesting, and again, this is all based off of the actual code that's hidden in the inscription. One reason they wanted to do this was specifically for the idea of preserving video games, because obviously after a certain number of years, these start to become public domain, and this will enshrine them, I guess, in the protocol forever. But yeah, this is someone who's, playing Teenage Mutant Ninja Turtles based off of an emulator inscribed into a Satoshi on the Bitcoin blockchain. And it's crazy. It's just, to me, this is just so cool. This is the game wallet, telling them to hold their beer for a quick minute, but
I think it'll work with these old school games, but Grand Theft Auto 5 is
obviously
140 gigs.
Yeah, no, that's not happening anytime soon. You're gonna have to find a new way to do that. But still, just it's just almost like how people were able to, program Doom into their touch bar on a Microsoft. I'm not a Microsoft, on an Apple MacBook Pro touch bar. Stuff like this. These are just cute little things. But it tells me that I'm paying. Some people paid 8 Bitcoin for a BTC Punk, right? So it's like you could pay 0.004 BTC to get an emulator or something like that actually works, and you can start playing, games that you played as a child. So, this is Mike. This is more than just Tetris on. This is more than just Tetris on the blockchain. I mean, this is full. I mean, any Super Nintendo game, I believe. I'll assume that GoldenEye does not work here. But any Super Nintendo or Super Famicom, if you're in Japan, game that was out there should work with this emulator. So anyway, obviously you need to own the game, obviously.
I guess. Do you? I mean,
yes, you do.
Yeah. Really?
Mm-hmm.
Okay.
In order to rip it, you have to own it.
I don't understand the hate for inscriptions. I'm starting to understand why they would exist in the first place, like outside, just kind of like the whole argument against NFTs, like why do they need to exist? Okay, well, it's digital property rights. It is like a digital artifact that is on a shared database that everybody can access. Like, okay, that's super cool. But you know what else I don't understand? I really just can't wrap my mind around.
Tell them.
Got 18 people in the stream and only 11 likes. How's that possible?
That was beautiful.
Not mathing. All right, thanks. Sorry, back to you.
No, that's completely true. Karen with a comment about FTX releasing funds that were locked out. No, that's definitely a scam. That's not true.
Totally scam.
Total scam. So yeah, those emails are gonna make the rounds. I mean, it's unfortunate even for just airdrops and stuff like that. How many emails, how many DMs, and all kinds of things that people are going to get. Just be careful, be vigilant out there. But yeah, I mean, obviously, no new news with regards to what's going on with the ETF, but that for the most part is what everybody's waiting for today.
Yeah. I don't know why I'm waiting. I don't know what's going to happen. I don't think anything's. Well, I mean, I know that the numbers are going to move around a little bit. I'm hoping that my OPE V3 position gets back in range. For those who are who've made it to the end of the stream, I guess I'll drop that little bit of alpha on you. I've got an OPE V3 position that I put 100% single sided OP in, and it starts collecting fees at around 0.00159, 0.0016, about there, and it goes up to around 0.00 or 0.0, yeah, 0.005. So it's like a 2.5x on OP against ETH, and it was in range for a little while, collecting about 160% APR, and then now it's just out of range. And I think that if OP continues to outperform ETH in the short term, that could be really juicy in terms of both price appreciation and triple digit yields. So
Yeah,
I'm
especially with
excited
decent
for
bag in
that.
these things. Yeah,
Yeah.
I mean, I mean, obviously, people are like, ARB is pre-programmed to 2. OP could be pre-programmed to 4. Um, but
Sure, but what's
I
ETH
mean,
in that world? That's the question.
exactly.
Like if
That's the
ARB is
question.
$2, what is ETH? If OP is $4, what is ETH? So, you know, yeah, sure, yeah, ARB $2 pre-programmed, but the question is, what's going to perform better against ETH? Is ARB going to perform better, or is OP going to perform better? I don't know in the short term. My bet, where I'm placing my bet for the L2 thesis, is on OP because of base, because of the OP stack getting more adoption. And yeah, I just think that the OP stack is getting more um, growth and more of an ecosystem in terms of roll apps and that sort of thing. So we'll see. I think that its connection. I mean, Coinbase holds OP on their balance sheet, so that's cool, right? I think that that narrative could help OP, but Arbitrum, in terms of its mainnet, obviously has a lot of DeFi going on. Their short term incentive proposals are juicy. I know Gamma. I saw something about Gamma tweeting that they had some Arbitrum stips going live today or
Hmm.
yesterday.
Same with Camelot.
So there's stuff happening on both. I'm certainly not bearish on ARB. OP is just where I've kind of chose to place my bet. And hey, maybe I'm wrong. I think they're both going to do well. Maybe I picked the wrong one. I don't think so. My conviction lies, at least over the course of the year, that OP could outperform ETH and will probably outperform ARB. And I'm excited. I just want to tick back up a little bit. I'll be back in range, get back to collecting those triple digit APRs. So
There we go. Well, guys, that's all we have for you guys today. So thanks for joining us. Hopefully, when we meet next week, we'll be talking about all kinds of different levels of Valhalla as we move. Because obviously, it's a different year, right? We have a Bitcoin halving, we have a Bitcoin upgrade. I mean, an Ethereum upgrade. Multiple narratives are in play. Airdrops are super hot. Solana and AVAX are super hot again. There's a lot of things going on, and there's just a lot of building going on. And just being here with us is a great key for you to, essentially just be exposed to it all and figure out what's going to work for you. So, anything else you want to talk about, Jangle, before we head home?
yeah, I'm lagging. Can you hear me?
Yep, go ahead.
Hello? Can you hear me?
Oh, yeah, go ahead. Oh
Rats.
no,
Okay.
I
Now
can hear
good?
you.
Nope.
Yeah, I mean, I can hear. We
Beep,
we can
boop,
hear you. I think
beep,
you're
boop,
just kind of
beep,
blue, blue,
boop.
blue, blue, blue.
Cut this out in post. Okay.
Anyway, oh,
Yeah,
good.
I mean, hey, this is we're still in the first innings, and strap in, stay plugged in. Now is the time to drop some distractions and double down on these markets, because Things are about to get juicy. We're going to be following the inflows into the Bitcoin ETF. We're going to be following the progress of the ETF. So stay tuned. And if you have anyone that is AFK, they're away from keyboard, they've been tuned out of the market since like the Luna crash or the FTX collapse, and you don't want them to be buying the top, tell them about this show so that they can join us every Wednesday here at 1 p.m. Eastern, and we can give them the scoop on the market so that they can get a hold of some of these bags before their exit liquidity. So yeah, join us here every Wednesday at 1 p.m. Join us on our platform, Beat the Banks. Chris, can you drop that in chat? Every
It's in.
Friday, Chris does a training on there, and then we will see you very soon.
There we go. I'll see you guys Friday, 3 p.m. Eastern. 07. Take care, guys. Have a great day.
07.